Dear learners, by watching this video, you will be able to learn about the petty cash book. What is the petty cash book? This is a separate book. We use this book to record small expenses. For example, just assume you purchase two pencils and it is 100 rupees. Then you purchase two water bottles, it is 500. You can use a petty cash book to record those transactions because here you spend a small amount of money. The petty cash book is a prime entry book and also a ledger account. Petty cash interest. The amount of cash given to the petty cashier by the main cashier. At the beginning of the month, main cashier gives money to the petty cashier for petty expenses. It is a petty cash interest. Reimbursement of petty cash. At the end of the month, the petty cashier should be given the amount equivalent to the payments made.
Look at this example. Petty cash interest is 2000. Petty expenses, water bottles 500, traveling 1000. The total petty expenses are 1500. 2000 minus 1500, 500. The remaining balance in the hand of the petty cashier is 500. Reimbursement is 1500 because the petty cashier will receive the amount that was spent, not the total petty cash interest.
Now look at the format of the petty cash book. Here we have separated expenses into stationery, postage, travel and sundry. At the end, ledger account column, we use this column to record cash paid to creditors, purchases of assets of a small value, and carriage inwards. Here you can see the double entries for the petty cash interest and reimbursement of petty cash interest. Petty cash book debit, cash book credit. For payments, relevant expense account debit, petty cash book credit. Now let's discuss this example. Petty cash interest was 2000 which was received on 1st of March 2025. Here you can see some petty expenses. Now we can use this type of petty cash book to record those expenses. A petty cash book has two sides, the debit side and the credit side. Now, firstly, let's record the petty cash interest. 1st of March 2025, description cash, we received 2000. We record it like this. Now we debited the petty cash book, so cash book credit because we receive money from the main cashier.
Cash book credit 2000.
The first transaction, 4th of March 2025, voucher number 1, postal charges 120. Now let's record this transaction. 4th of March, description, postal charges, voucher number 1, payments 120. When it comes to the analysis columns, we record this in the postal analysis column. Here we record the same values in both columns. 5th of March, voucher number 2, traveling expenses 160. 6th of March, traveling expenses, voucher number 2, 160. In the traveling expense analysis column, 160. 8th of March, voucher number 3, refreshment expenses 260. 8th of March, refreshments, voucher number 3, payment 260. We record this in the entertainment analysis column. 10th of March, voucher number 4, stamps 140. Now let's record this. 10th of March, stamps, voucher number 4, 140. 15th of March, voucher number 5, traveling 60. We record it like this. 18th of March, voucher number 6, to Vimukti 200. 18th of March, Vimukti, voucher number 6, 200. This is a payment made to a creditor. We record this in the ledger account analysis column, 200. Because we have a separate account for Vimukti. 22nd of March, voucher number 7, threshold charges 240. Date 22nd of March, description threshold charges Voucher number 7, 240. In the traveling column, 240. 25th of March, voucher number 8, carriage inverse 200. 25th of March, carriage inverse. As we discussed before, here we record this in the ledger account column. 26th of March, voucher number 9, refreshment expenses 180. 26th of March, refreshments, voucher number 9, 180, entertainment, 180. 28th of March, voucher number 10, pens and pencils, 150. 28th of March, pens and pencils, voucher number 10, 150. When it comes to this transaction, we don't have a separate analysis column to record this. So we record this in the miscellaneous expense column. 30th of March, voucher number 11, cleaning expenses 200. 30th of March, cleaning expenses, voucher number 11, 200. Again, we don't have a separate analysis column to record this. So we record this in the miscellaneous expense column. Now take the summation of all the expenses. 1910, postal charges 260, traveling 460, entertainment 440, miscellaneous 350, and ledger account column 400. When balancing this account, we write 2000 here and here. Now we can take the balance 90. 31st of March, balance carried down 90 rupees. 1st of April, balance brought forward 90 rupees. Next, reimbursement of the petty cash impressed. Here we don't receive 2000. We receive 1910. Here we receive the amount that we spent on the petty expenses.
Cash book credit 1910. Previously we debited the petty cash book, so cash book credit.
When it comes to these four analysis columns, we record the summation into the ledger accounts.
Postal charges account debit 31st of March 2025 petty cash 260. Traveling expenses account debit petty cash 460. Entertainment expenses account debit 440. Miscellaneous expenses account debit 350.
For this column, for the ledger account analysis column, we open separate accounts for each transaction.
Vimukti's account debit 200. Carriage inverse account debit 200.
Here I made a mistake. Actually here this is not the 6th of March. This should be 5th of March.